Artificial intelligence is no longer a temporary technology trend. It has become the foundational infrastructure of the modern world. Today, not only the software industry, but almost every sector, from manufacturing and finance to healthcare and defense, is being reshaped by this transformation. In other words, AI is not just part of the future, it is the future itself. This shift is forcing the investment world to reshuffle the deck. Semiconductors, cloud computing infrastructure, and cybersecurity companies now sit at the epicenter of this revolution. Because for AI to function, it needs massive computing power, data storage, and robust security. Without these three pillars, the AI revolution cannot stand. Despite short-term market volatility, one critical fact remains clear. Major funds are not abandoning technology investments. On the contrary, they are expanding their strategic positions. The reason is simple. This transformation is not temporary. It is a structural shift that will unfold over decades. In the long run, companies embedded in the AI ecosystem represent some of the highest compound growth potential available. We are living in a period of rising global geopolitical risk. Increasing conflict probabilities, energy security concerns, and political instability are making the global economy more fragile. However, every crisis also opens new growth pathways for certain sectors. Today, those pathways lead directly to defense, renewable energy, and energy storage companies. These sectors are no longer just investment choices. They have become integral components of national security and strategic independence. Governments around the world are allocating massive budgets to strengthen defense capabilities and secure energy autonomy. For investors, this translates into long-term, predictable, and resilient revenue streams. Decade-long contracts and powerful government incentives provide these industries with a unique protective shield. As a result, even during the most severe global crises, their cash flows remain strong. These future-building, crisis-resistant sectors form the strongest fortress within modern investment portfolios. A new era is emerging in global finance, and Bitcoin stands at its center. What sets Bitcoin apart from all other assets is its mathematically enforced supply limit. There will only ever be 21 million Bitcoins, and this unchangeable scarcity makes it one of the rarest assets of the digital age. Bitcoin is no longer limited to individual investors. Institutional capital, major funds, and publicly traded companies have entered the space. With the rise of ETFs, institutional custody solutions, and clearer regulatory frameworks, Bitcoin is becoming integrated into the traditional financial system. This evolution is transforming it from a speculative instrument into a core component of modern portfolios. In a world where fiat currencies are printed without limit, Bitcoin stands out as a transparent, decentralized, and scarce store of value. For many investors, it is no longer a high-risk bet. It is a long-term hedge against monetary debasement. Within the crypto ecosystem, the focus has shifted from hype to real-world utility and technical infrastructure. The next generation of winners is likely to emerge from Layer 1 and Layer 2 blockchain projects, the foundational highways of the digital economy. These networks enable faster, cheaper, and more scalable transactions. Decentralized finance solutions, Web3's vision for the next Internet, and AI-integrated data protocols sit at the core of this transformation. While these sectors offer significant upside potential, they also carry elevated risk. High reward, always comes with high risk. In the long run, only projects that genuinely build infrastructure, not those that merely generate noise, will survive. In the digital future, permanence belongs to the builders. For centuries, one truth has remained unchanged. In times of uncertainty, gold and precious metals stand as the ultimate safe haven. In an era of accelerating money creation and persistent inflation, gold is not merely an investment. It is a method of wealth preservation. Today, central banks around the world are reinforcing their reserves with gold. This strategy reflects a deep understanding of systemic risk. History has proven time and again that while systems change and crises pass, gold retains its value. As the insurance policy of a well-constructed portfolio, precious metals provide balance amid riskier assets. While growth is important, capital preservation is essential. A resilient financial future is always built on diversification and balance.